Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 24th, 2025, and we're diving into Merck's first quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Merck's latest financial performance.
Let's get started with a brief overview of Merck. Known as MSD outside the US and Canada, Merck is a leading biopharmaceutical company focused on innovative health solutions. Today, we'll explore their Q1 2025 earnings report, which was just released. Revenue and profitability overview. Let's start with the top line. Merck reported total worldwide sales of $15.5 billion for the first quarter of 2025, a 2% decrease from the same period last year. John, can you elaborate on this?
Certainly. The decline in sales was primarily driven by lower demand in vaccines, virology, and immunology segments. However, this was partially offset by growth in oncology, cardiology, and diabetes. Notably, Keytruda sales grew by 4% to $7.2 billion, showcasing strong demand in oncology.
And what about their earnings per share?
Merck's adjusted EPS came in at $2.22, beating the forecast of $2.16 from 7 analysts. This indicates a solid performance despite the sales decline. The GAAP EPS was 2.01, reflecting a 7% increase from last year, driven by improved net income.
Operational efficiencies and future outlook. John, let's talk about Merck's operational efficiencies and their future outlook. How did they perform in terms of margins and expenses?
Merck's non-GAAP gross margin improved to 82.2%, up from 81.2% last year. This was mainly due to a favorable product mix. R&D expenses decreased by 9% to $3.6 billion, largely due to the absence of a significant charge from last year. Looking ahead, Merck expects full-year sales between $64.1 billion and $65.6 billion, with a non-GAAP EPS range of $8.82 to $8.97.
That's quite an optimistic outlook. What are the key drivers for this guidance?
The guidance reflects Merck's confidence in their pipeline and ongoing product demand, particularly in oncology and animal health. However, they also account for potential headwinds like foreign exchange impacts and additional costs from tariffs.
Pipeline and strategic initiatives. Merck has been making strides in expanding its pipeline. Can you tell us more about their strategic initiatives and recent developments?
Absolutely. Merck has been actively expanding its pipeline through strategic agreements, such as the exclusive license with Hengrui Pharma for an investigational LPA inhibitor. They have several ongoing Phase 3 trials, including those for subcutaneous pembrolizumab and Winrevair. Additionally, they've achieved key regulatory milestones, like the European Commission's approval for Keytruda in new indications.
It seems like Merck is positioning itself well for future growth. How do these initiatives impact their long-term strategy?
These initiatives are crucial for Merck's long-term strategy as they aim to diversify their portfolio and enhance their market position. By focusing on innovative treatments and expanding their reach, Merck is setting the stage for sustained growth and value creation.
Key takeaways. As we wrap up, let's summarize Merck's performance and investment prospects. Despite a slight decline in sales, Merck delivered strong earnings and maintained a positive outlook for the year. Their strategic initiatives and robust pipeline are key to their future success.
Indeed, Merck's ability to beat EPS expectations and their focus on innovation and strategic partnerships bode well for investors. Their commitment to advancing their pipeline and achieving regulatory milestones is a testament to their growth potential.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Merck's performance in the comments below.